All right, ladies and gentlemen, I hope you had a wonderful day. The CPI came in hotter today. The market dropped 1.5% within minutes. And by the end of the day, the Fed futures priced in only 1.5 cuts by the end of the year. If you're not familiar with this story, we were pricing in 3 cuts in December. Then by January, we were pricing in 7 cuts. By March, we came back down to 3 cuts. And now here in April, the market is pricing in 1.5 cuts, while the Fed dot plot we just got a couple of weeks ago was still pricing in 3. So, Chad, we got a lot to talk about. We still have data tomorrow. What happened with the bond yields and the setup that it's leading to? It's all going to be important. We have a lot in store for April, and even then, right around the corner, we still got earnings. So, Chad, I got the plays. I have the keys, all that good stuff. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestackmarket. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, off the bat, there's a lot of things we could talk about with what happened today, but let's keep it very simple. The data came in hot. It was hotter by 0.1% month over month, but the fact of the matter is that the last 4 CPIs, the exact same thing happened. So this was something that we kept talking about today. If you guys go look at the previous expectations and how the numbers came in, all of 2024, even in December, it was generally always 0.1 higher than expected. And all the while, even though that was the situation, the market was able to keep going up. Why? Because even though people got worried along every single checkpoint, you had Jerome Powell and the Fed saying, this is what we expected. We are not reacting to any one data point. And that's where the market has been following this general path. So that's what I have here on the keys. We've been talking about it a lot, even though you had a hot reaction and today did go down. You didn't keep flushing on other days. You would have just bounced right back up. You did remain closing down 1%. That's what the options were pricing in. We finally had a negative reaction, but you're still holding up a very high level. So that's what I'm saying here. The path remains, but you're definitely starting to look a little bit shaky, and people are now once again responding to the 4th month of hot data. And every other time it has came out, we have reacted. Yeah, Powell and other things, we've been able to brush it off. But once again today, people are worried that maybe this isn't just a blip and now it's showing that inflation isn't going down. So if Powell reassures us, we could get rid of all of these fears. Otherwise, we'll see how the market takes it moving forward. But in general, this was a hot print. You had your reaction. And like I'm saying, the market did go down. We were talking yesterday how some banks were saying, like JP Morgan, we could drop as much as 2% at the morning. And this is kind of where today was interesting. We dropped 1.5% within minutes, but by the market open and as we started trading, you actually never went that low. I think the lowest we were down intraday was like 1.3. So even though today was hot and it did surprise people and it did get you pricing out rate cuts, again, bonds, those were the thing that got murdered today. They went above 4.5, and we'll talk about that here in a little bit. Besides all of that happening, you didn't go that 2%, and you were actually down even more pre-market. So it's like, could have been worse, caught people some off guard, but definitely now with bond rates and everything else, the story is still brewing, and that's where the next couple of days and everything else is going to come into play. But now, moving forward to the next key, there's a lot of talk going forward, even with all of the wild swings today. And like I'm saying, with everything going on, there's been a lot of factors we have to watch, and lately the market really hasn't been responding. And the way I'm looking at it moving forward now, this hot data and several months in a row kind of bringing these fears back, I still still think the market can hold up, but now with bond yields above 4.5 and people being more hawkish than even the Fed, I don't think the market has as much protection as before. This is what I was saying today. Pretty much the way I'm looking at it. Now with bond yields above 4.5, the market is losing its armor. So moving forward, I do expect hot data to really start hitting us. And why do I believe that? There's a couple of reasons. One, last time we did a 4 or 5 month stretch of rates going up from like high or low threes to 4 or 5. That's exactly what happened from August to October until things started changing, or Powell was like, okay, more rate cuts, and then data did calm down a little bit. That's one reason. There's many reasons why 4.5 gets very bad. We've been talking about it. Another simple one is last time you were at 4.5, besides this recent time in this cycle, it was around 2007. But if you really pull the chart back and you see how rates in the 10-year has been, 4.5 is a very interesting spot. Only time you've hit it on the way up besides right now was like 1999 after it fell from being at like 7.3. This was after rate cuts, then it bounced, and then finally any other 4.5 that was on the way down. And once you broke that, you never saw it again until now. So there's a lot of things going on, not to mention what it means for rates being restrictive, all of that good stuff. But hopefully you're seeing what I'm saying. The last couple of months, we've brushed off a lot of data. We followed the path, but now bond yields and what they are saying, it is very aggressive. And I'm going to talk about that in the last key, but I do think now with rates up, we do have to see if the market starts reacting a little bit more to any of the future data, especially if it continues to prove a hotter trend. So hopefully this plays out, or why I say hopefully, because then it'll actually be concrete. But if I end up being wrong on this and this proves to be incorrect, it'll probably be because we rally off of earnings or the data finally starts to cool down before it gets any worse. So it's not to say that 4 or 5 is going to kill the market. This has been the tricky narrative we've been following, or the relationship between stocks and bonds. So it's not to say this is guaranteed to happen, but last time we reacted to this, it wasn't good. So we'll see where it takes us from now. But leading into the final key, I think we got some information and the market moved a little different, but held on to the path. And that's why now tomorrow, the PPI, it really should pack a punch. And if it does move hot, and I think it is going to come in hot because one, all of the CPIs have been following the same trend. They've been coming in slightly hotter. All of the last PPIs, they've came in slightly hotter or really hotter at some at the beginning of the year. I think we may see the same thing, and I think it's going to have a reaction there on the market. If it is in line, maybe we're able to brush it off. But like I'm saying here, watch out for the earnings effect. And one of the reasons why we may be able to move on, earnings, but you kind of saw it here today, there was safe havens. Even though today was bad, like go look at NVDA, that thing did not move at all. And now they don't have earnings coming up, but this just got me thinking, well, it just reminds me of the days on earnings where some names or a lot of the market will generally move, but then if there's earnings right around the corner, it kind of holds up. And for now, push and pull, if the data is going to get us moving a little, but the market's still holding on to a path, the thing that's going to decide a lot moving forward, it will be these earnings. So watch out for that. Watch out for the Fed speakers. We're also going to be getting some of that there tomorrow as well, too. Again, bank earnings on Friday. But now here's the final thing. I've dropped some hints on it throughout the video. The irony of all of this and like what we're going through, and this is why I'm saying, we have to watch how things really play out, is that stocks are up. You have to really understand that the market is still very strong. And I say that because right now, if you go look at like a dot plot from the market and the Fed futures are more hawkish than the Fed dot plot. So it went from market was pricing in 7. Now the market is undershooting the Fed and cut what the Fed is saying in half already. And that's why I'm saying now, watch how the market moves with the bonds and everything moving forward, because even though stocks may not have reacted already, the whole bond market is extremely hawkish. Not only the Fed futures in the dot plot, but like literally that move on the 10-year, even the 2-year bond today, it's absolutely awful. And think about it, if a 2-year bond right now is sitting right below 5%, and your rates are at 5.2 to 5.5, I mean, this is essentially insinuating one rate cut. A 2-year bond at 5% is higher than even where the Fed thinks you will be in 2 years. So this is what I'm saying. The bond market is already hawkish. The market's kind of in its own little world, but now we'll see anything moving forward from here. Does this finally start to close the gap? But today was a big one. We're going to have a lot more follow-up with everything else in the data and earnings, even Powell at the end of the month, too. So I hope you're ready for all of it. But now, let us get into the plays. So, right off the bat, I'm getting killed on my bond plays. Future, I think I'm down about $7,000 on my 30-year bond play. I'm down another $3,000 on the 2-year bond play. That one's actually not as bad, but still pretty bad. And then my gold play, that one did a lot. Surprisingly, not down as much. I think right near the close today, it was only down like $400, but that one swung from green to red all day today. So I'm still going to be holding those. May average or get out of one of them. The bonds, I just think the bonds are extremely hawkish. That's why I started playing them before. But if anything, still riding those plays, and those are the plays related to kind of what's going on here. But as far as other plays, and one play I'm going to start off with now, I still have Baidu getting clapped on that. Want to keep an eye on Baba. They have China data tomorrow night, but also they outperformed today. I don't know if you guys noticed. China names, some of them did good, but Alibaba, and one of the reasons, saw this after hours, apparently Jack Ma made a lot of positive comments about the company and the restructuring, and he said something about being in the AI era. So that was a little silent driver there, but watch out for Baba. I'm going to keep my eyes out for it, and again, maybe we need to let dust settle. I mean, from Baba all the way down to the yen getting clobbered and hitting one of these lows. Let's see how this data presents it. Maybe these plays may be better next week. Maybe China, Japan, and they do their own moves once the dust from all of this American stuff settles. But for now, there is certain events, but it does seem like though Baba and other things are just getting dragged by everything else we're going through. But watch out for that. That is play number one. Then play number two, I already brought it up, but you can't ignore it today, man. NVDA. And I really think this one's going to be interesting. One, with rates above 4.5, does it act as a safe haven? Does it hold up like it holds up today, or was today just a fluke? It's one thing about being NVIDIA, but also NVIDIA had another reiteration of a $1,000 price target by Morgan Stanley, and they had good analyst activity today. Even like SMCI, I think that was the only one that held up. There was other chip makers, and I made a play today. I grabbed 1,000 shares of Intel. We were talking about it yesterday. I decided to go for it. I thought it was holding up nice, but ended up losing $1 a share, down $1,000, but going to ride that out. Hopefully Marvel's event, but man, NVIDIA really stood out, and I want to see how these chips play out. But for the most part, we really want to see, do they keep leading? And then if we do watch these days where things sell off and things are responding even to rates, what does NVIDIA do? If it really proves safe haven, I mean, that will absolutely be huge. So watch out for that. There's going to be other chip earnings like Intel coming up, but remember, NVIDIA is down the line. But that is play number two, and then play number three. The final one, baby, JP Morgan and Citi. We're going to do the earnings previews tomorrow. Yalla, baby. But I thought I would give it to you also right here, right now. Yes, on the watch list. Maybe you're not going to be here, but this should simplify anything. And then even if, like, you be spamming me tomorrow and you're like, yeah, let the play. When I say 2 standard deviations, I'm going to be like, why didn't you watch the tutorial? Why didn't you watch the watch list? Please like the video. You know what I'm saying? But this is exactly what I am going to be doing tomorrow during all the earnings previews. If you hear me talk about previews, this is what we're going over. So tomorrow I'm going to do this before the bell, since the banks report on Friday morning. Tomorrow's Thursday, the day before. I'm going to go over the expected numbers on revenue, net income, EPS. We're going to go over how much the stock has moved in the quarter, how much the options are implying, how much it's moved on the last 4, and then how often they have beat and missed. And then I'm going to go to the option chain and price in the options, and then we're going to do our strategy to see if there's a play. So the other day, I went over my watch list play on what I'm doing here, but as far as pricing it in, all I'm going to do is go to the at-the-money strike prices. The stock's at 195, take the 335, the 385, that's like 720-ish. You got 716, it even shows you here. That's that 3% priced in, and then we're going to double it up. and then go from there. So in this case, I think 720 times 2 standard deviations. The plays that I'm going to be looking for are about $14 higher and $14 lower than where the stock is now. So this is the calculation we're going to run. I have the same thing on Citi, and if I could tell you anything on both of them, I have priced them in, but they're both pricing in like 3 and 4%. Now, granted, bank stocks don't usually move too much. Both of them are kind of near highs. Maybe it ends up being a big quarter for them, so that would be the only surpriser. Otherwise, the options should be cheap, but last time I think we did get burned on the bank plays. We only hit one of them. It was either Citi or Morgan Stanley. That was one of them we hit. But we'll see how those earnings play out. But I'm going to be watching those, going over those a little bit more in depth tomorrow. Besides that, those are the main plays. I made those 1,000 shares of Intel, riding a bunch of clap plays, but have the ability to ride some of them out. Not too worried, but then at the same time, too, I think the market, we got to find out how resilient it's really going to be. And we still got a couple more months of time to kill, but only 2 more big data sets. But Chad, that is your watch list, ladies and gentlemen. Make sure Hydra Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, baby, if you know how to worry, you know how to meditate, baby. Meditate on good, baby. Use that energy. Focus it. Put it in the right area. The good direction. Not towards the worry. Towards the good stuff, baby. But Chatadonia, I love you. God bless you all. Drink that water. Stay hydrated and healthy. I will see you in the AM. Not too early for PPI, even though that comes out an hour before the bell and it's going to move stuff. But, man, we got to lie. And it started, baby. But, Chad, you already blessed. You know. Oh, no.